Hi everyone, good morning, good afternoon, good evening, wherever you are. I'm your host, Dr. Haider Shah, and on behalf of Calvas, I would like to welcome all of you to this webinar. Thank you very much for joining us. Today, we have another very interesting panel discussion, and I'm really honored to welcome and to introduce our distinguished guest speakers who are going to talk about the comparison between traditional finance and Islamic finance. So you will get the best insights regarding the what is the basic difference between traditional finance and Islamic finance. So stay tuned because an amazing stuff are coming ahead in this session. So before we start, I would like to thank the Kalwas for arranging such enlightenment sessions and for their support and providing such a wonderful platform. The aim of the Kalwas is to give you the opportunity to interact with the world-renowned speakers, teachers, authors, researchers, experts, professionals, and businessmen to share their views and experiences and tips which will create an impact and will enable you to learn new things and develop yourself in order to grow individually as well as to contribute to the world at large. As our slogan is come, learn, and share knowledge. So today we have a wonderful panel. Let me introduce the first guest. She is an amazing person. She has a vast experience. She is internationally known and recognized speaker. Above everything, she's a great human being and always ready to contribute to the world in different ways. Let me introduce her formally. She did her bachelor's and master's from of business administration from IBA, the University of Sindh, and her MPhil is from the Ikra University, Karachi, and PhD is from the University of Malaya, Malaysia, in business finance. During her studies at the University of Malaya, she served as the event management director of the Association of Pakistani Students. She has published research papers in national and international research journals. Along with that, she attended international conferences and presented research papers in national and international conferences that were held in the Malaysia and Pakistan as well. She attended various seminars and webinars as a panelist and guest speaker on different stages and different topics related to business economics, innovation, and social culture issues. She is recognized supervisor for the MPhil and PhD candidate by the Higher Education Commission, Pakistan. Moreover, she is the external examiner for MPhil and PhD thesis dissertations, also performing the role of evaluator and reviewer, also a member of board of different journals in the process of publication of research articles. Apart from that, she has published various articles on different social, political, and economic issues, including the current world situation regarding COVID 19 in the different newspaper and magazines in English, Sindhi, and Urdu languages. Beside columnist, she is also a wonderful doing the poetry and writes the poetry. She has published two books on poetry in Urdu and Sindhi language. She has also completed her studies as a lawyer. Her research work that currently consists of more than 25 research papers on her business field can be seen at her current account on Research Gap. So indeed a pleasure to welcome our first guest, Dr. Navida Katpal. How are you, madam?
Alhamdulillah, I'm fine. Thank you so much, Dr. Haider Shah, for this again great and very high level of introduction. So
Thank
I'm
you.
grateful to you for offering
Thank
this
you.
opportunity to come into the program.
Thank you very much. And that brings me to the another guest, which is very wonderful person, always contribute to the world with a smiling face. And we have invited him multiple times, and he is so kind enough that he always makes sure that he is available for us to contribute to the world and share his knowledge. He has obtained his PhD from University Technology Malaysia, which is one of the top university in Malaysia. He has more than 11 years in academia and industry experience. He has published several research articles, Impact Factor, ISI, Scopus, Index journals, and HEC recognized journals. In addition to that, he is well equipped with both the qualitative and quantitative research methods and data analysis technique using the smart VLS. Moreover, he has also participated at various international and national conferences. To me, he is the elder brother, the mentor, my friend, colleague, and a wonderful guy. That is the Dr. Shahab Aziz. Dr. Shahab Aziz, welcome to the Kalwas platform and thank you very much for joining us again.
Thank you very much for giving us an opportunity to share, whatever we know about, these. So looking forward to this session. Thank you.
Yeah, thank you very much. And today we have the third panelist. Is the she will be joining us shortly. She is stuck somewhere, so most probably she will be joining us shortly. She is an associate professor in Department of Finance, Institute of Business Administration, Karachi, Pakistan. She has more than 16 years of progressive regulatory research, training, and teaching experience with organization of international repute. She has extensive regulatory experience with specific focus to promote Islamic banking and finance while working in the Islamic banking department of State Bank of Pakistan. She is a Sharia registered financial planner. She holds the chartered Islamic Finance, a professional credential from the INSEF, that is International Center for Education Islamic Finance, with distinction, and PhD in Islamic Finance from the INSEF. She holds MCOM with the distinction and PGD in the Islamic Finance Insurance from Institute of Islamic Banking and Insurance. Moreover to that, she is currently her interest area are the political economy, management, Sharia, wealth planning and management, Islamic microfinance, corporate governance, and Islamic finance. So that is the Dr. Iram Sabah. She will be joining us shortly. So through this way, we will start the first question by asking the Dr. Navida that Dr. Navida, please enlighten us on brief historical perspective and building blocks of the conventional finance. What are the building blocks of conventional finance, please?
Yeah, so actually, the history of finance is very old, like we can say 7,000 years ago, when the people started to purchase things by creating the things. Means we can say the by the barley, by corns, by metals, and all these things that are called in a later times it was called as a barter system. But before that, the things started in this for the exchange, the medium of exchange as a money, because the finance, we talk about that the finance is all about the management of the money and the finances for using of the medium of exchange. So the medium of exchange, and from that time was created in different shapes, like the commodities, and then after that the coins, stamps, and the costly things to deliver. Then afterwards, gold and silvers. These were used for the unit of money as a medium of exchange, because the barter system was very famous that time. It started as a very good solution, but that at that time it was that. But afterwards, it seemed that it was very difficult to determine the prices or determine the valuation of the different goods, because as we say that if when someone wanted milk in exchange of any animal, or what is in exchange of a corn, then the similar prices was very difficult to determine. Once we can, it is said that, for example, for an animal, for the minor meager product, or whatever say routine good, that is cheaper one. What we say that is, for example, for rice, for 1 kg, or for one even 2 kg rice, one cannot cut the goat or buffalo or a cow in the pieces, and to match the prices of these type of the commodities or goods in the need of the people like common people and poor people, like that. So this system was also means obsolete. And then afterwards, the paper money, before that, the gold and silver they used for the determination of the amounts of the prices of the goods and products, and then used like that for the exchange of the medium of exchange. And then afterwards, the paper money was created after coins and these what we say seals and then stamps. So the paper money worked a lot and in a good way, and this paper money created another the new era for the finance, and then afterwards the we can say the different other products of the money and the exchange of medium created like credit finance, and then credit cards and many others that we are using. After that the technology, whenever the technology we can say increased, and the innovations increased, and I think before that we can say that whenever in the US, UK, and Europe and other European countries, there were many banks that Bank of Amsterdam or Bank of London, and the many different banks that they started the money management, and like to manage all the irregularities that occurred in the system of the finance. Then afterwards, again, the Roman started the different banking systems, and then 16th 17th century the proper paper money worked good in a good way. After that the technology, as I said you, the technological goods products that initiated, and money as a credit and all technologically online digitalization started. After that we can say today in the era of this we can say in this decade, the digital money, or we can say cryptocurrency and digitalization and technological, the exchange of medium of exchange and all other things are introduced, and they are very much at the high level of the technology. So that including we can say these are the components of the fintech or financial technology. So this was a brief and we can say very brief history of the money travel of finance travel. Coming to another part or segment of your question, that is about the building blocks of the finance. So building blocks of the finance are very much important for any of the we can say finance structure, individuals or business. And these can we can say in the way these can be categorized in a different we can say components, like pyramidal type of the distribution, in which we can say someone manage his or her or their finances in a way that they can achieve the goals of their set goals of their planning, and whatever they want in their life, and from the current situation to the future, and how can they save their position to we can say work better in the future. Like I particularly say that the first the basic found the block is like the wealth preservation or we can say the wealth foundation or wealth protection. This is the first block when the people think about the wealth protection and foundation of the wealth, making that. And then second is the wealth accumulation. They just spend money and then acquire money, and then whatever in the schooling, in the different colleges, in the different professions, in the big broad vision in there. And then at the third it is the wealth distribution, whenever they are distributing or consuming their income in the we can say real estate or different kind of these things. In the simple words, if we define the building blocks, is that we can in the different views there are different terms used for the building blocks. As in the common language or common person, we can to understand common language, we can say that building blocks are consisting of the like 4 or 5 major components or factors that can be the we can say from the saving, and then budgeting, and then investing, and then income and expenses. So one can manage their life with their own expenses and income, just because it starts from the savings. As we say, wherever we are making the foundation of, if there is saving with us, we can we can do the things furthermore for the future. For example, after saving, and we can set the budgeting. Budgeting has a different rules, and budgeting is also technically very we can say focus demanding area, in which there are different rules like 50%, 30%, and 10% rule. Another is that another rule is again 70%, and the 20% and 10%. These rules, what they tell us, they tell that, for example, in the first start, I told you that are the, we can say 50%, 30%, and 20%. That are the 50% means you spend your money in your routine works, in your utilities, in your billing, in your basic needs, and all that you are needing and serving in your life. So this is the suggestion for making budgeting, that 50% you can utilize in over there, and then after that 30% that is in the, after that you are, for example, investing in anywhere, for further making your the finance and capital accumulation and earnings, whatever different avenues. And then after that, the last 20% you can for your charitable works, for other different works that are means in coming in your life. So these are the other rule, also saving that 70% for these basic needs, and including your expenses, education, your kids education, your family planning, family making, family responsibilities and their expenditures, etc. And then like 20% in the investment and all these other projects that if you want to grow in your life, and then professionally, etc. And then in 10% in the other features of the charity, or we can say the different the works and activities. This is just I gave you the glimpse about the building blocks of the finance for any person, for any group, that they can manage that. Dr. Haider, this is over.
Yeah. Wonderful, superb insight you have provided, Dr. Navita. It was so wonderful. Even though I'm not the expert of finance, but I enjoyed your answer because you were telling the things which I have been studying in my BB honors and MS, because we had the finance related subjects. So it was
Thank
just
you.
like a recap of all the things which you have mentioned. And that's the beauty of the expert, that they always make things in an easy way and give you the recap in the a short period of time. And what a building blocks you have mentioned, it's so wonderful, wonderful answer for that. Thank you very much. And now we have this second question from Dr. Shahab. Since you have a wonderful industry experience and academia as well, please share what is the current state of Islamic finance industry in your opinion. Yes, please. Your mic is mute, Dr. Shahab.
All right, sorry, all right, all right. When we talk about Islamic finance industry, so let me give you a brief about when it started, right? Uh, the
Sure,
latest
please.
research in Islamic finance, I think, started back in 1960s from Egypt, where first Islamic bank started its operation, and I think after 80s or 90s, in last I think 2 or 3 decades, Islamic finance has grown tremendously in the world. And when it comes to the state today, the size of Islamic finance industry is around $2.4 trillion, and it has spreads in many jurisdictions. Basically, the what are the components of this industry, right? We can categorize Islamic finance industry into four sub segments, right? The biggest segment in Islamic finance industry is Islamic banking. Then we have sukuk. I'll be just giving a brief about these as well. And then we have Islamic funds. And the fourth thing is takaful. As far as Islamic banking is concerned, The overall Islamic finance industry is dominated by Islamic banking. Around 72% of the share in this industry belongs to these Islamic banks' assets. So Islamic banking primarily is dominating the Islamic finance industry, right? Sukuk stood around 22%, Islamic funds around 4%, and Takaful have the least share in Islamic finance industry, which is around 1%. In terms of regions, if we see the spread of these Islamic finance assets, GCC Gulf cooperation countries have the 45% shares in overall Islamic. So almost half of the Islamic finance industry is located in or lies in GCC countries. And then we have Southeast Asia having around 24%, Middle East and South Asia 26%, Africa around 1%, and other countries around 3%. So basically, there are four major areas. The first is Islamic banking. Nowadays, we have a very competitive Islamic finance industry. They are equally good as conventional banks. They are providing Sharia compliant products according to the faith of many people. So they are competitive, they are growing. That's why they have, like in Pakistan, we have a tremendous amount of growth in Islamic banking assets. And right now we have around, I think, more than 16 or 17% share in overall banking industry. So in Islamic finance, Islamic banking has been over the years growing and setting their footprints in uh, overall financial system because they do provide many solutions to the businesses, so they are equally good as the conventional banks. Number two is sukuk. uh, we know bonds are very important for debt financing, right? The conventional bonds are not according to Sharia principles. So what is Islamic alternative? That is sukuk. Basically, the difference is in Islamic financial system, we don't have debt-based transactions, right? Because the exchange of money with money can only be at its par value, right? So one cannot earn money on money. So these debt-based instrument like bonds are not according to Sharia principles. So Islamic alternative is sukuk, which is again around 22% in overall Islamic finance industry, which is at the second after Islamic banking. So Sukuks has been growing in the world. I mean, I've seen many non-Muslim countries, they have issued Sukuk just because they want to get the resources. Because a lot of big investors have concern about the Sharia legitimacy of the transaction. So just to cater those investors, even the Western countries. I've seen in Japan, I've seen in Sukuk in Germany, and you name these countries. Uh, they might not have a lot of Muslim population, but still, for big projects, they structure their transactions um, in a Sharia compliant way to attract many investors. So Sukuk has been phenomenal as well. Not in many Muslim countries, but still, like Malaysia has been, I think, right at top when it comes to the Sukuk transactions, and many non-Muslim countries have done as well. So that's the alternative for Islamic bonds. Then we have Islamic funds. A lot of investors go for invest their money in fund. We have different type of fund like pension fund, fixed income fund, equity funds. There are open ended and close ended, you name it, there are a lot of fund. So the fund management, if you do it in a conventional way, then that's again against the Islamic principles. So there are a lot of Islamic funds available nowadays which invest the money of the investors according to Sharia principles, and then they give halal return to the investors. So this, but the Islamic funds have just 4% of the share in overall Islamic fund finance industry. So it's not significant, I would say. The last thing is the kafal. That is an alternative of conventional insurance. Conventional insurance is prohibited because of there's some element of gambling in that, riba as well. So conventional insurance has been criticized by Sharia scholars according to Islamic principle. So the Islamic alternative is the kaful, which is again, might not be a very popular among the masses because a lot of people are not aware of how it actually works. Its share is just 1% in overall Islamic finance industry. So this is just a brief background, because the scope is, we don't have that much time to explain each and everything, like how things work. But these are the four main pillars or components of Islamic finance industry. Islamic banking is right at the top with more than 70% share in this industry. Rest are also progressing, but I think they will improve with the time. So this is the state of Islamic finance industry as we speak.
Yeah, very nicely said, Dr. Shahab Aziz. What an insight you have provided, the basic pillars, and how can you understand the Islamic finance and its importance, particularly to the industry. Wonderful explanation and wonderful answer for that purpose. And you have rightly mentioned that yes, it's so a big topic to discuss, and we cannot discuss it in such a short time. But very intelligently, you put all these things in a very wonderful way, in an easy way for the viewers to understand the basic difference, and then how can it be more important to that perspective. So, Dr. Navida, I would like to ask another question from you, as the Dr. Shahab Aziz has given wonderful introduction of the Islamic finance industry particularly. So my question to you is that when do entrepreneurs prefer Islamic banking or Islamic finance over conventional or traditional finance? As you know that the trend is growing upward. So do you believe with that statement, or what is your opinion on that? Why there is a preference towards the Islamic banking finance over the conventional finance? Yes, please.
Yeah, this is a very good, relevant question when we are talking about conventional and Islamic finance. So the entrepreneurs, they are not away from this avenue. They are the entrepreneurs, means the business builders. They are the people that can change the world, innovating and making innovations, and like growth in the economy. They are responsible for the growth of economy along with many other benefits. So entrepreneurs can avail the Islamic financing and loan like that, financing capital at any stage, at any time, means from startup to the running business and to the whatever the business activity they are making. They can avail Islamic finance because Islamic finance are providing a number of benefits to the entrepreneurs. Like if we are talking about the business startups, they can avail the Islamic microfinance. They are the available product in the domain of Islamic financial structure. Islamic microfinance is a very good for the entrepreneurs because the loan is interest free or zero, yeah, we can say non-interest based. And then another choice for the entrepreneurs is for going to Qarzul Hasana is an example for the entrepreneurs, even for SMEs, small medium enterprise. These are the entrepreneurs. this is an example that Karzul Hasana is not only for other individuals and students, but also for the business persons and entrepreneurs. They can avail the loan and finances from that type of the Karzul Hasana is again the zero interest, or we can say is a very good opportunity for entrepreneurs to avail for their business if they are very much worried about, especially in the countries of in poor countries like LDCs, like Pakistan. They are our entrepreneurs and initial when they are initially having the concept of business, where they have business idea, they have business plan, but they are very much stuck in the situation when they say that they are not able to get financing. If we are talking about the other conventional finances for them, the personal loans, they are about with the rates of the 34-35% rates, they cannot afford if they are in startups. Then that's why the very much established entrepreneur can avail loan from anywhere, no matter conventional or Islamic. But I'll suggest that whenever the entrepreneurs are in the preliminary stage, or they are beginners, they are in the startups, they must avail the Islamic finances loans. And then another, in the running finance, entrepreneurs also can avail the different products of the Islamic finance, like Murabaha is a very good product for them. The civil selling of the purchasing of the goods, commodities, and delay payments. And then after that, we can say Ijara is also the leasing type of the financing through Islamic structure, Islamic banking and Islamic finances. They can avail that. Also purchase the because assets are we are using the assets for the purpose of business. And the major I think the major investment and major problem for the entrepreneurs is to collect the avail the fund for collecting the assets can be the working capital, and we can say current assets, and fixed long-term assets, and both can be purchased by this Ijara type of the system in the Islamic banking. This is also the good the opportunity for the entrepreneurs to finance through Ijara, Murabaha. Even Mudarba is also the another third option for the entrepreneurs, because entrepreneurs they started any business. And in the structure of Mudarba, one special vehicle, that is the concept for that that is created by the Islamic finance, that is the institution, that is for the special purpose vehicle. That is some type of the institution can provide the fund to them. And or we can say financial institution, or other we can say bank, or when any financial institution can provide fund finance, and the entrepreneur can be the mudarib and as a manager or agent of that, and can work and start the business. And they start and they utilize, or what we say, exploit the resources, economic factors, and economic what we say indicator to improve economic indicators. But because I say that entrepreneurs are working, our business is working for the betterment, not only for the profits of their own say self, but for the betterment of the society and economic boost. So whenever the entrepreneur is exploiting resources and factors of production, as we say, economic factors they utilize, and then in the consequent, in the result, in the outcome, we see the economic indicators are improving if there is so much huge investment in that. So this is Mudaraba type of the structure where the entrepreneurs can avail their this opportunity, and actualize their dream, or what we can say idea of business. Then Musharika is again is also known idea, that is also by the partnership they can do this. And these all products are, many other are there in this line, and these all are very much we can say beneficial for the entrepreneurs, because there is no much highly, we can say, there is no highly in uncertainties and risks for the finances, and their startups, their initial plan can be actualized in this way. That's why I can say at any stage an entrepreneur can avail the Islamic financing.
Yeah, very nicely said. Once again, Dr. Navida, you give a lot of information and you have wonderful command on that things because you have mentioned a lot of options why it is more popular and it is good for the entrepreneurs to take advantage of it. So that brings me to another question from Dr. Shahab Aziz that Dr. Shahab Aziz, could Islamic banking have prevented the financial crisis or is it stable and as compared to the conventional system? Yes, your opinion on that, please.
I
Dr.
think
Shahab,
net
can you
problem
hear
is
us? Yeah, there is, I think,
net,
internet
yes,
connectivity
net,
issue
yes, connection
might be.
problem. Yeah.
Yeah, yeah. Yeah, there is a connection problem, and that's what we previously were discussing. That these are the limitation of the technology as well. Sometimes it happens, and it's very much normal thing. I think
Yes,
he
yes.
has joined us again,
Yes, can you hear me?
so he is joining. Yes, Dr. Shahab Aziz, can you hear us?
Yes, yes, yes.
Yeah,
I can hear you.
Dr. Shahab Aziz, my question to you was,
Yeah,
yeah, my
I
question
will
was
send you
that
a question.
could Islamic banking with the financial crisis, or is it
All right.
stable as compared to conventional system?
He's getting problem still, I think.
Hello?
Yeah, yeah. They, yes, Dr. Shah, can you hear us?
Yes, 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 I can hear. I'm
Yes.
audible or not?
Should I repeat the question? Question.
No, 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 it's okay. I heard the question.
Okay, fine. Please go ahead. Yes,
All right.
your answer on that, please.
The world currently have a debt-based system which is dominating the world, right? We have Asian financial crisis. We have 2007-8 mortgage crisis. So the debt-based system is not based on the principles of risk sharing. The conventional whole setup is based on transferring risk upon others, right? Uh, and earning money on money, right? So parts of the economy or economic system. One is financial system. The other one is you have a real economy or a real system. So whenever there will be a gap between your financial system and real economy, the system will collapse, right? So there are a lot of studies of even IMF and World Bank, if you browse through regarding the stability of the system. When you have assets or they are backed by assets, because there is no concept of earning money on money or uh, exchanging debt with debt and earning money on that, because these transactions have nothing to do with the real economy. So all the Islamic transactions are based on either exchange of assets, sale of assets, lease of assets. So the presence of asset is mandatory in Islamic transactions. Is more stable, uh, not theoretically, but that has been proved empirically as well. There are a lot of studies which show that, like for example, Islamic banking system. has not been exposed to the risk in financial crisis as compared to the conventional system. So the risk sharing system or asset based system is more stable as compared to the conventional system. Written by two economists. They are in America. One is from Pakistan, but he's based in America, and the other one is, I think, the Muslim author as well. They have written a book which is called House of Debt, and the whole study was regarding 1930 Great Depression. In the book, they have empirically proved as well that had it been equity-based system in the economy, or as compared to the debt-based contracts. So now we see a lot of research which has proved it's not something that I'm talking. I mean, so anyone can browse the latest research about stability of the financial system. Which system is more stable? Even IMF, World Bank have studies as well, which empirically has proven that the Islamic financial system is more stable as compared to the conventional system. In today, like 2000 wealthiest people in the world having more wealth than the 4.6 billion people. So just 2000 individual in this world having wealth more than almost 80% of the world population. So this is the end result of this conventional system. It has created huge disparities, inequalities, looking for something which is more stable, which can, you know, lessen the gap between these haves and haves not. The large inequalities should, get closer, where we have a balance. A lot of people talk about financial inclusion, balanced growth, something like that. But they see the end result of this conventional system, because that system is based on transferring the risk. The capitalists don't take any risk. He simply lend money, give debt, and transfer the whole risk on the other party, right? So when one party is taking the whole risk and the other party is taking no risk and just grabbing the return, so this whole conventional system is creating inequalities and disruption in economies. We see a lot of financial crises, and people are always talking about when we'll see the next financial crisis, right? So this system needs to be replaced with, I think, the asset-based or asset-backed system, which is more close to the real economy. So I think had there been more equity-based transactions in economy, these can give more stability where risk can be shared, not transferred, and eventually the result would have been different from the what the world is seeing even now and then, crisis after crisis, crisis after crisis. So I think the research shows the system more stable, and logically and theoretically as well, the system have close link with the real economy. It adds to the stability of the system. So this is how I have like read and studied in last few years about this Islamic system. Thank you.
Yeah. Thank you very much. Such a wonderful answer. And again, you have given the references of different scholars and research and see your different publications, since you are conducting research on Islamic finance and you are leading the world in these kind of things. So obviously, wonderful insight you have provided, and that brings me to the another question, which is very much relevant, and I would like to take the opinion of Dr. Revida on that. That why are Islamic principles important for global development of financial markets? Your views on that, since Dr. Shah has very nicely explained the principles of the Islamic finance. But again, what are the Islamic principles important for global development? Yes, Dr. Navida, please, your take on that.
Yeah, yeah, and that is also a very much related question after Dr. Shahab answered. The thing is that for the global development, why financial Islamic principles are based, Islamic principle based financing, financial structure are these economy is important. The answer is very much clear to the world, and many researchers they are supporting this type of the phenomena. And I also of this am of this view that, for example, if we look, if we see what are the principles of the Islamic structure, Islamic principles in this regard, these are some of them are, for example, relevant one, the justice and the equity, equity in the distribution of wealth and all other things. And the third one, for example, we say the transparency, and then what we say the protection of humanity, and many other regarding. If I am while talking, I will add that there are many different principles of Islam where someone honesty, when we say trustworthy, and many different other the pillars, we can say the principles of Islam. They suggest us that whenever we are living our lives, Hadith, Quran, and then the word of Allah is that whenever we are living our lives, especially to Muslim, but this is worldwide, globally now, not for the Muslims, but this is the formula working for non-Muslims too, and they are admitting it. And then we can say that more than 80 countries are the accepting and applying this concept of the Islamic finances nowadays. And these are not all the Muslim countries. Non-Muslim countries are welcoming that because of what we say the wisdom of this type of the system. Now, these are a few Islamic principles. Now, how they help in developing global economy, because we say that when there is justice, there is what we say, we can see, we can have all rich researchers, whatever educated uneducated people can know the worth of the justice. When there is justice, other many other evils can be corrected by the justice. And if there is no justice, there is the welcome of the we can say thousand times, we can say evils can be created and can be welcomed in the society as well as economy. These are all we are not talking about here such the Islamic finance, but we are talking about the society building, where the where the business or finance is the component of the society. The business are business persons, consumers, customers, we can say they are also the residents of the society. We all are included in it. So the impercussions, what we say, factors, the effects are exerting all type of the parties, or we can say stakeholders. So we are directly or indirectly involved in this system, whatever we are talking about, a business, finances, conventional or Islamic, the whole society is in under that. And the other principle, Islam, social responsibility, corporate social responsibility, all these are given by the Islamic structure. If they are not justice, social responsibility, and we can say honesty, the for the mudarib or for the manager, for the business person, if there is no honesty, no trustworthiness, there is nothing to do in the fair means, or we can say nothing to do with the interests of the even owners and even customers and consumers. There should be and quality is also in the Islamic principles is also very much important. For example, if there is no the products are not quality in the quality based produced in the market, consumers and customers are not satisfied again. So I say that the conventional finance is can be come under the umbrella of the Islamic finance. Islamic finance is a broader vision, and the principle of Islam is giving the convention plus Islamic the solutions of the problems in the business they are occurring, extending the point of Dr. Shah Baziz when he said that, for example, in 1930s depression, even adding that in 2008 depression, when the subprime mortgage crisis occurred, and it triggered in 2004 and 5 the subprime mortgage loaning, and then the crisis triggered the crisis of the 2008 recession, and worldwide, globally. What is this is the outcome, and this is the result of this conventional system where the high risk is allowed, high risk, high return. This is the business we teach, and we learn, we read. The business rule is high risk and high return. So why? But why? Islam says the moderate. The Islam support the moderation, moderate, average, and this average is very much based in all spheres of even life, including business. Extremes are very much, we can say, very much hazardous, very much damaging, and these damages are coming into the shape of the crisis when we are seeing big global recessions, depressions, and crises are because of this system. And they conventional type of people, I can say the advocate of the Islamic finance will always support that these are the reasons of the depressions and recessions and that crisis are the reasons of the conventional type of system, because high risk, as well as you can say the no equity system, not equally the capitalist type of the base of the economy is there. But Islam denies that, and then the justice and the equity when will be prevail, then all the problems and matter will be solved. Addition to that, a big reason in my view is the speculation. That speculation in the conventional financial system is very much high. That's why we say that the high risk is occurring. What happens in the foreign exchange currency investment, what happens in the stock sharing investment, and what happens in what we say whenever in the Bitcoin and the Dogecoin and the cryptocurrency, it is all the what we say is speculation. And speculation is forbidden in the Islam. Even transparency in the market, the information when there is the we say the asymmetric information, there is no not symmetric information in the markets. It happens when some group of people has a good information or more information than another group of people. So these investors, when we talk about the investors, they have the not equal information, means no transparency. Transparency means equal information, and there is, if no transparency, not equal information, then on the basis of this they are exploiting the market. And in the result of exploiting of the market, and no matter from the, this is also working on the behalf of the, or on the rule of the demand and supply, but it occurs because of the lack of the information to one group, and the miss means imbalance information to the different groups. Now what happens, these different group of investors, then when they invest in the stock markets and the financial institutions, even in the short term securities, long term securities, currency market, and whatever the different markets, then they are investing, they work on the basis of this type of the speculation. And the most important thing, by the way, through this channel, I appreciate your program. In my mind is I want to convey that the most importantly, Islamic finance or Islam supports the real investments. Real investments, I want to explain this in clear words, is that, for example, in the conventional markets, the investors are investing money for making profits, high profits, even take high risk for high returns. And for example, they can earn millions and billions and trillions. But whenever they are in the shock, they are downwards even to the earth, and they cannot even sustain that shock, and maybe psycho, and they can be psycho, they can be with the heart attacks and deaths and whatever. This type of the imbalance of system is not supported by the Islam. So I wanted to ask, the explain about the real, in my view, why Islam says that the speculation should be forbidden, and why these all things are not supported by Islam, and these principles of Islam are important. Because we all you all know the stock markets and capital markets, stock exchanges, they are working on for the investors, other than the promoters, founders, or permanent shareholders, stockholders. I am talking about those that are temporary stockholders. That's why their shares are coming into the market, stock exchange, because free float market is due to the those investors who have the ownership, but they are temporary owners, and they are selling and buying stocks in the stock exchanges because of due to earning the profits, and large profits. Now, when the focus will be on the speculation and on the just profits to make, the investors, the investor will spend their more and more time on watching the trend of the currency, even the stock, for making the profits. That is called speculation, and they will not work hard work, or in a real sense they will not contribute in the society by hard working. That Islam forbids about this. And what is the motive behind that? I think, understand, in my view, if we are focusing on speculation and earning through this speculation and selling and buying, we will not work on the manufacturing side. Our focus, what Islam also supports, our focus should be on the manufacturing side, on the service side, on the producing side, the production and the production, and what we say, the increasing of the assets, or real assets in the country or any economy, is very much important. Because we know that money reserves, gold, and foreign exchange is backed behind the assets and reserves. If we are only the country, any country, our government will only print the money, only paper printing, only money producing will not be the solution of all these things. All those crises that I talked about, the subprime mortgages, were that they were not prime customers, they were subprime, means that they had not the credit worthiness of what we say, they were poor relatively, not the repayment capability to the banks. That's why the crash of that, I'm not explaining because of that short of time. I just wanted to focus on the point. The point is that the investors focus should be on the real investment in the real manufacturing side, service side, that can contribute in the society, that can contribute in the economy, and that investment only can the improve the indicators of the economy. Otherwise, we will always, we can say, in the conventional system, and it is the speculation system, and not transparent system, just gambling. That is, I will appropriate word is the gambling for that all. And Islam strictly forbids the means say about that gambling is just like very much hatred in not disliked in the Islamic principles. All these, when we are talking about the when we are taking out the principles of Islam that shows the justice, equity, the transparency, the honesty, the trustworthiness, when they are missing in the conventional, and they are obviously missing because of the imbalanced information, asymmetric information, speculation, gambling, high risks, these are against that. And that we are seeing the crisis in crisis over crisis in the different timings. When what we see that if we are saying that the initial roots of the 2008 crisis comes from the 2004, 5, 6, and it means on the record it creates in 2000, December 2007 up to 2008 total, and 2009 even up to 2010. Now whatever this, all the crises are spread over at any one conventional bank or one bigger country, big economy, developed economy. If it emerges there, all over the world or globally, we are affected. And similarly, I say that, for example, that is, if that happens, then we say years, 4, 5, 6, 10 years, even decades, are required to uh, to man, to maintain or to repair or to what say mend these bad results of the crisis of recession and inflation and depression and job losses, how millions of job lost in 2018, and other many things that I, just because my answer was very much elongated, that's why I am stopping it. But this is very much, we can say, that coming to the conclusion that Islamic principles is, because that's why the solution of all the crises and solutions that are creating by the conventional type of system, welcoming and accepting all those type of the unethical things. That's why it is said that Islamic financing is ethical financing. So it is the solution in my view. Thank you so much.
Yes, thank you very much, Dr. Navida. Once again, very elaborative answer, and you have explained so many things which are going in the background, and that was wonderful. And that's what I used to say, that the expert, they always connect the different dots in a way to make you understand, particularly the viewers who are watching this program. Obviously, they are getting a lot of benefit out of it because you have mentioned a lot of factors and why such things are important in that perspective. Okay, since we have short of time, I will quickly ask the Dr. Shahab two questions regarding the research, because he is very much involved in research publication in the Islamic banking. So there are questions from you. That first question from Dr. Shahab is the one student who is a PhD student conducting a research on Islamic banking. So he wants to ask that I am conducting research on Islamic banks and I'm unable to find the literature. Can I take the conventional banks literature for the same variable? What's your opinion on that, please?
Yes, if you can't find literature in Islamic domain, yes, you can take the literature from conventional as well, as long as you logically you can justify why you have brought in that literature. Was a psychologist. His background was psychology. Kahneman and Tversky, they were psychologists basically, and they were working on human behavior. And then they had done some research related to how the financial behavior of individual, and they have challenged some conventional theories, and eventually they got Nobel Prize in behavioral finance. A lot of theories from psychology have been take any literature from conventional. Yes, you can take, but you have to justify it logically when you develop your argument. So there is no harm in taking literature as long as you can relate it to your context, whatever you are studying, and you can logically justify it why you have taken that literature, how it is related to your context. So this is very much acceptable.
Yeah, very nicely said, Dr. Shahab. And you know that the people who are at the start of their PhD proposal, they are very much concerned regarding the proposal, how to pass it, and for that particular area, they need to know that whether the conventional banking literature would be right enough and appropriate enough to be included in Islamic related research. So you have given a wonderful example of the psychology researcher that they have given the behavioral sciences conducting research on these kind of things, and they give these kind of things. So wonderful. You have cleared the doubt of that student. One another question from you, Dr. Shahab, that is the related to the indexes. That please suggest me another Islamic indexes beside Dow Jones Islamic Index, Islamic Market Index of United States, and Jakarta Islamic Index. Are there any indexes? Can you just refer to that, student, please?
One is FTSE Islamic Index, and the third is Russell Juada, right? So I know these three as well, besides Dow Jones Islamic Index. So I mean, whoever had asked, he can search these three as well, and you'll find these three index. There may be some other index as well, but to my knowledge, I can mention these three. So whoever had asked this question can at least look these three indexes available.
Yeah, very nicely said. Once again, thank you very much for your answer, Dr. Shahab Aziz. That brings me to the last question from Dr. Navida. Dr. Navida, can you just guide one student? They want to ask that can that person relate the fintech subject to the Islamic finance thesis? Because there is a lot of misconception regarding that fintech is only related to the conventional banking or conventional finance. So, can they relate the fintech to Islamic finances, particularly for the thesis purpose? What's your recommendation on that, please?
Yeah, thank you for the question. This very important question and good question. Yeah, of course, of course. This is the fintech is not apart from a part of the Islamic finance. And who says that? This is very, I think, a very sadly spread that the fintech is for the conventions and fintech is not for the Islamic. Actually, fintech is not related to any religion or any culture or any tradition, or we cannot associate fintech for financial technology to any sect. This is for generally for all over the world, and whatever the technologies are supported by the Islam, it is the, I think Islam is the modern and very much supporting religion of technology. So what I want to say that the Islamic finances is very much same way related to fintech, and fintech is just like is not the riba oriented things. Fintech is the technology, and technology is for all. And even many researchers and the proposals from the Bahrain and the Malaysian people, they are very much these countries are top on the, but in Africa also, and then we can say in the different European countries, they are also focusing on that. But this is worldwide. Fintech is the as an essential part of the world that is not related to any segment or religion. And many what we say that in Pakistan, I'm giving you example, different, we can say the SAS program, that was the SAS cash relief fund. It was I think distributed through fintech, and the 6.8 million people were reached in 1 week. And then what harm when we are, this is the mobile money transfers, and the mobile, the technology, the computer, all other things can be introduced in the products of the Islamic finance in very well way, like in the conventional, and it is not the property of convention. And we can even, it is not a question, we cannot distribute this fintech or financial technology for any the particular segment or the group of that. And it is another thing that cryptocurrency, what we talk about, that some people, the advocate of the supporting people, they say that this is riba free. But cryptocurrency again has different other things that are prohibited in Islam. For example, for example, high risk, number one, is uncertainty is prohibited. A secondly, gambling type of this system, it is a gambling type of system because of speculation. there is high speculation in that. And if you are earning high returns, not earning very much, you are at zero. So we can analyze on the basis of the Islamic principles that they can come into that or not. And it is very much from the Sharia board, it is defined that you can invest, you can earn money for less than 5% or 5% of the income from these type of non-Sharia type of companies is a revenue. And then you can invest in the 33% in this type of the companies. And the other non-halal and other for example alcohol, pornography, and many other things are related products and companies are prohibited in Islam. Other than that, if we are investing, what we see, we have to see is it according to the Islamic principles or not. Then we are deciding on the basis. Otherwise, the fintech is very much related to Islamic finance, and we can do this very much clearly. All the products among that.
Yeah.
Thank
Thank
you.
you very much for once again wonderful elaboration, and that's the beauty. I would say again that you connect the different dots in a way that it could simplify and it could clear all the doubts of the students. Particularly we have gone through all of the research journey that even the small things will count a lot in the particularly PhD research work in your thesis. That's why people they have certain doubts and they want to make things clear from different experts. And today you have shared a wonderful insight regarding the Islamic finance and the conventional finance. I'm enjoying this session a lot. I learned a lot from you too regarding the Islamic finance and the conventional finance. Because since I did my PhD in HR and I'm more inclined towards the HR related things. So finance is a bit and difficult. I would say that it's very interesting for the people who are more good at relating the different kind of what you call the uh, formulas or calculation are the things to understand it, because it's a different science to understand it properly. So thank you very much once again. Wonderful knowledge you people have shared, and I could see that a lot of people they have congratulate us on this wonderful topic, because it's very interesting and very hot topic nowadays, and that's why we had invited you people to share your thoughts on that. So in the last, what I would always ask the our guest, that what are your concluding remarks and your message to the world as teacher, researcher, trainer, learner, and professional. So I start with the Dr. Navida. Yes, please. What's your message to the world? Because today you have shared a lot of wonderful information regarding the finance, conventional finance, and Islamic finance. Uh, as an expert, and how do you see the world, and what's your message to the world, please?
Thank you, Dr. Haider Shah. I already took a lot of time. That's why I will very briefly give my message is that it's very good to learn and please acquire knowledge, because not only conventional but Islamic, if this is the related as a topic, we relate this message to this to our topic. Yeah, today's session is that Islamic and convention, both type of both type of the we can say learning, or what we say the areas suggest us to learn and acquire knowledge. And with knowledge you can earn more and you can invest more. And one more thing is that if we people are related to the business and business administration type of the topics we are talking about, you must understand that do not go through for the speculation or just leisurely or just idly sitting. Ideally, I want to say that sitting and looking at the trends and for the returns, high returns without working. So Islam and Islamic principle, they suggest that you just work hard, you contribute, and by your efforts you earn the money. That means, well, you can be the entrepreneurs and big entrepreneurs. Just sort out the things how you have to utilize your idea and go for the manufacturing, servicing, and all these sides, so that you can contribute for improving the indicators of economics in overall the economy of your country. Thank you so much.
Yeah, thank you very much for such a wonderful answer, Dr. Namida. Now, I would like to ask the Dr. Shahab Aziz, yes, please, your concluding remarks and your message to the world as teacher, trainer, learner, professional, and educator. Yes, please.
I'll be giving message of first related to Islamic finance. I mean, especially for those who are Muslims. I mean, riba is a big sin which we don't realize nowadays. And there are very clear verses in Quran about highlighting how biggest this sin is. But unfortunately,
It's again net problem.
I think there is a kind of connectivity issue. Uh,
Mm.
Dr. Shahab was saying wonderful thing, but we are unable to hear it. I think he will shortly join us, and we take his message, and then
Yes,
we, yeah, and then we just try to conclude the
sure.
session. Yes, yes, Dr. Shahab. Yes, quickly give
I'm
your
sorry.
a message to the world.
I'm sorry. Today I
Yes,
have some disruption.
yeah, yeah, yeah. True, true. This is
So,
the technological limitations. So please go ahead.
the first part was relating to this Islamic finance. That I think we should realize, we should look into it, how we are doing our business as far as banking or other things are concerned. Secondly, I think we should make some contribution to the society where we live in, because especially in our society, like where we live, there are a lot of issues, and there's a lot of things that we can contribute to the society. The way you are doing, this is a wonderful thing that you are making a contribution to the society. I mean, and, you are providing us an opportunity as well to make a contribution. So I think we as a human being, we should try to make contribution to the maximum we can, because the world needs a lot of attention from people. People are greedy, too much selfish. Everybody's concerned about himself. Nobody is thinking about others. So I think we should think about in these lines as well, just not living our own life. We should look around as well and try to make a contribution to the society. And for students, go after your dreams, like, see what your passion is. Don't do things because others are doing. If everyone is doing MBA, don't go for MBA. Look what your strengths and weaknesses are, and where you can be good at, and how you can make a contribution to the society at large. I think these are the few things that I would like to share. Thank you.
Yes, thank you very much, Dr. Shahab Aziz. Wonderful message you have given to the world, and thank you very much for encouraging us. I would say that actually credit goes to you people, that you people spare the time and come and share your views, as we invite you people just because you have attained certain positions and a wonderful place, and we want the people to listen to you, because whatever you recommend has a worth, and that all these things are the guidance for the people. And you have rightly mentioned that yes, we have to contribute back to the society, and I believe that yes, giving back is the wonderful thing, because we have gone through this journey of research and all these things. We have seen the world, and we have gone through a very tough time. and through this way we can help the people, we can guide the people, and that's the biggest contribution. As the Dr. Shahab has already said, that yes, our society is facing a lot of problems, even in this pandemic situation. If we pave the way for the people, and if we provide guidance to the people, that would be a wonderful job along what we are doing for ourselves. So, Dr. Shahab, very nicely you have given message. And secondly, I like the your suggestion to the students that yes, look after your passion, see what things you can do in a wonderful way, what are you are blessed in, and what are the gifts you have received from the God, from the Allah, in that perspective, and explore accordingly. So in the end, I would say that thank you very much, both the Dr. Shahab Aziz and Dr. Navita, for your wonderful explanation. Indeed, it was a wonderful insight you have provided to our viewers, and I'm sure that the viewers, they would have learned a lot from this session. I would recommend to the audience that do follow the distinguished guest speakers through their research work, and you people can email them for future learning and guidance as well. They are always happy to help the people, and they're always there to guide you in the right direction. So that is all we have time for today. Thank you once again, the Dr. Navida and Dr. Shahab, for your wonderful time, tips, and suggestion. And I would also like to thank our audience who join us. If you have any additional question regarding the information shared, please email to us or connect the speaker directly through their emails or social media account. Thank you all for your support and liking our sessions. Stay tuned because many sessions are on the way. And please do not miss any session. So, till next session, take care of yourself. Bye bye.